Welcome back, cool cats, and happy Father's Day to all the dads, grandpas, and men who have stepped up. Between the Japanese and FOMC interest rate decisions, options triple witching, and the Israel-Iran conflict, this week is going to be exceptionally volatile. I have a very important announcement to make, so please stick around so you won't miss it, and let's get into the analysis. As always, nothing I say is financial advice. These are just my thoughts, opinions, and cats. I'm going to kick things off with SPY on the daily time frame. Just like I shared in my last video, I still think that this key trend line in gray that goes back to March of 2020, around 578, and also just below the 200-day simple moving average here in purple, could get tagged before the market continues to go higher. I'm even looking at this price action here, and this is really starting to look like another smaller bullish megaphone pattern. So we could absolutely see volatility continue to increase until we hit major support and then break out to the upside. If we head down there and it acts as support, then we'd have to contend with the previous all-time high of 613.23. And then if that can be broken, we'd be looking at this multi-year red resistance line around 630 to 631, depending on where you hit it, as major resistance. And this is exactly why I say that this whole rally could still potentially be a massive bull trap. The market has the potential over the next few weeks or months to force shorts to close who placed stops at or near the previous all-time high, using them as fuel. Then the market could roll over, quote unquote, bigly if this major resistance can't be broken. And if I zoom out a little bit, it becomes a lot more evident that there is a very obvious bearish divergence on the daily time frame for SPY, where the RSI has made a lower high, but price has made a slightly higher high. So even that indicates that the market could continue to roll over until this overbought condition works itself off. Hopping over to SPX on the monthly time frame, I don't show this in every video, but this is ridiculously important. This dark red resistance line on SPX goes back to the Great Depression of 1929. Every single time that it's been touched, it's led to major sell-offs and depressions. Back between December of 2024 and February of 2025, the market just kept trying to push above this line, but it absolutely could not, ultimately leading to this massive sell-off between February and April of this year. If we zoom in on the daily, we can see how this symmetrical triangle target here in purple was roughly about 6,100. We came within a stone's throw of that, and even if it gets completed, there's no guarantee the price is going to continue up. And I can absolutely see a scenario where perhaps we go back down to grab more liquidity, then we tag this multi-decade resistance line, and whether price consolidates around that level for a couple of months again or rejects sharply after making a slightly new all-time high, I see the market rolling over in a major way after that. When we move over to QQQ on the 4-hour time frame, we can see how price just keeps bouncing underneath the old support line of this multi-year channel, which we can see right here when we zoom out on the daily time frame. And I think either it's going to break above this soon or the rejection could be hard. I wouldn't be surprised to see it correct along with SPY, maybe hitting between about 517 to 518, then go back up and keep hugging that key trend line until either SPY or SPX either hit their main resistance lines and reject, or the multi-year and decade resistance is finally broken. And although that's not impossible, it's pretty unlikely. Did I call it or did I call it? I said in my last video that the first touch of the 200-day simple moving average on IWM would likely lead to a sharp rejection, but that if the market was bullish enough, that level may eventually get broken. On Friday, it closed just above the 21-day simple moving average, near the lower bounds of this supply zone. And if it continues down, it's likely to find support around 207, where the 100-day simple moving average is, as well as the baseline of Ichimoku here in orange. And then if that breaks, it could come down to about 205, which is the previous resistance line that goes back to the previous all-time high right here. And as I've been saying, this big megaphone pattern is still targeting between about 225 to 226 if it plays out. So just like SPY and QQQ, I would not be surprised to see IWM to go back down, grab more liquidity, and then go up and at least break previous all-time highs before potentially rolling over. And like I mentioned in my last video, I had done further charting on IWM on the higher time frame. So when we zoom out on the monthly, you can see that there are very strong trend lines here in green and in red and in dark red, similar to SPY and QQQ. So when I zoom in a little bit more, you can see very easily that even if we break the previous all-time highs, we're going to be contending with this major trend line here. And I could see the potential that IWM comes up to about 246, maybe even up to 250, depending on where it hits, and then rejects sharply. And of course, this is something that could take weeks to even months to play out. I just wanted to give a huge thanks to everyone who has supported me and for reaching almost 2,000 subs in under a year. We're only 5 people away. None of this would be possible without you. And if you're enjoying my content, please consider sharing this on your social and tap that like button, for the algos. I'm not going to spend a lot of time on Bitcoin because really not a lot has changed, but I just want to remind everybody of the levels. There was this old bullish channel here, which still potentially could be in effect. Even the old upper resistance line, as you can see, as we got above it, it acted as support. When we got back below it, it acted as resistance. So these extended lines here and here seem to be holding significance. And then in addition to that, we can see here in purple that there's an even wider bullish channel that it's inside of as well. And Bitcoin has been struggling with this roughly about 110 to 112,000 level. It seems to be acting as supply. But if that can be broken, then we could see Bitcoin come up to this upper resistance line between about 138 to 140 something thousand. Whereas on the flip side, it could potentially come down, and if it were to touch around 78 to about 80,000, where these two support lines converge, for anyone looking to go long on Bitcoin, that could be an amazing buying opportunity. Looking at Dixie, the dollar strength index on the 4-hour time frame, if we zoom in a little bit, we can see that we briefly broke below the support line here in purple, but it's dancing around it right now. If this consolidation pattern, this falling wedge pattern were to break fully to the downside, like I shared in my last video, it would have it breaking this over decades long support line here in green around 97 even, because this would be targeting a measured move of roughly about 95.80. The support line goes all the way back to April of 2011 and it has never been broken, so it is extremely significant, and if it gets broken, it could mean very bad things for the dollar. If you're a silver or a gold bug, then you definitely want that to happen, but it could also represent the collapse of the US dollar as we know it. And I'd encourage you to watch some of my previous videos where I've covered this more in depth. On the flip side, if we hit that support line, and it acts as support like it has for years, Dixie could be back on its way up to the 200-day simple moving average, around 104 even over the next few months, which could really catch some dollar bears off guard. And if we just look at the obvious bullish divergence that has been forming on the RSI over the past few weeks, right as it's approaching this very key support level, I don't think that's just a coincidence. And that also means that if dollar strength starts to strengthen again and move up, we would actually expect precious metals to move down in price. Moving over to TLT on the 4-hour time frame, so far this big falling wedge here in purple had its initial breakout up to about 87. It retested the previous resistance line around 85, and now it's retesting this strong trend line around 85.75. And this is that same trend line. This thing goes all the way back to March of 2023, and every time it's been hit, it's acted as either strong resistance or support. So if that trend line acts as support, TLT could be headed to about 88 next, which should be the next major area of resistance. And if this pattern fully plays out, it's still targeting roughly about 94 to the upside, which would be hitting the previous support line of this very long-running bearish channel, as I've pointed out numerous times before. And I've got to say, if this pattern actually does play out to the upside, that's indicating that at least in the short term, we're expecting a serious flight to safety, and it's coming pretty soon. And if we get up to this previous support line, I would actually anticipate that we would reject off of it. Looking at the VIX on the 4-hour, I pointed out this very obvious bullish divergence last week, and as we can see, it did play out. Briefly peaked above the main multi-year red resistance line here. Then it hit the previous support line in light green that goes all the way back to February 21st, and it rejected. But it literally closed just below this resistance, showing that fear has not fully abated. And if we take a look at the extended resistance line in green that began with the VIX peak on April 7th, if that line can be broken above around roughly 23, which also happens to be a key level for the VIX, then there is the potential that the VIX could retest roughly about 25.50. Then the next levels would be around 30, then roughly 38, so on and so forth. I'm not saying that the VIX will go that high, but the possibility is there. If we zoom out on the daily, we can see how the VIX is literally just resting on this multi-year resistance line. And the RSI is showing a hidden bearish divergence where price made a lower high, but the RSI made a higher high. So what does that mean? It means that VIX bulls are likely to be short-term exhausted, and I would expect a pullback in fear, which should correspond to a small bounce on the markets. But it shows that the uptrend in fear is in play, and we're likely to see a higher VIX in the coming weeks and months. Even this miniature falling wedge that formed into the end of the day on Friday on the ADD market breadth indicator tells me that the market is due for a short-term bounce. We can even see this bullish divergence here on the RSI, and that could happen as early as Monday depending on the headlines. If you aren't using the ADD or some similar market breadth indicator to monitor the strength and patterns for the overall market, I really think you're selling yourself short. I've covered how to use it in so many of my previous videos, so please feel free to revisit them, and I always include timestamps in my video descriptions, so finding the ADD portion is so easy. The Israel-Iran conflict is adding volatility to the markets. War in the Middle East rarely affects the markets for long unless it's drawn out. If Iran blocks the Strait of Hormuz, some analysts are saying oil could go to 120 to 130 per barrel, and currently it's only around 70 something per barrel. This inverted head and shoulders pattern that I've been sharing overshot its pattern target of roughly 73.75, and it's now at a pivotal point. Price pushed back above this resistance line of this pattern on momentum, but as you can see from this wick, there is a lot of price rejection here. Plus the daily RSI is definitely in an overbought condition. What happens next is very important for oil. If it retests the previous resistance line around 71 and confirms it as new support, then it could open the door to retest roughly about 80.75, 84.50, 87.50, 95 on and up. If, however, this doesn't confirm as support, then this could have been a rally based purely on fear, speculation, and shorts closing positions, at which point this could roll over pretty aggressively. On a last note, I would encourage everyone to really dig into just how bad credit delinquencies, the housing market, student loan repayments, and even things like hardship loans and early withdrawals from retirement accounts are getting. I hope I'm wrong, but I think something as bad as the '08 Great Financial Crisis and possibly even worse is on the horizon. There is a reason that every other developed country in the world has been cutting interest rates rapidly. They're fighting strong deflation, which is caused by global lack of demand. The real creators of money aren't the Fed, they're the banks who lend to people like you and I, businesses, etc. And if they're tightening up lending standards and increasing their reserves, it means that they know a storm is coming. And this week is going to be absolutely jam-packed with economic events. On Monday at 11 p.m., Japan is releasing their interest rate decision, as well as earlier in the day, the US at 1 p.m. is having another 20-year bond auction. And if you remember anything about the yen carry trade, you know just how important this Japan interest rate decision could be for the overall markets. And it's sure to affect Dixie pretty heavily. On Tuesday, we have retail sales, which can affect the market a little bit, but I'm not expecting it to move the needle much. Wednesday, I'm really expecting it to move the market a decent amount. Early on in the day, we have initial jobless claims, which the market is paying attention to, and even continuing jobless claims is important to keep your eyes on to know the health of the overall economy. But at 2 p.m., we've got the FOMC interest rate decision with Jay Powell speaking as well. And as always, it isn't just about the interest rate decision, but it's listening for little nuances in what Jay Powell may say while he's speaking to give us an indication of the way that the Fed is thinking. Thursday, the markets are closed for Juneteenth, so there's not going to be anything going on then, but then it's going to be followed up on Friday with the Philadelphia Fed Manufacturing Index coming out at 8:30, and the most important thing on Friday is that this is the options triple witching event, which only occurs 4 times a year. And it's the third Friday of every third month where stock options, stock index futures, and stock index options all expire at the same exact time. And it can lead to immense volatility. And if you believe in the Max Pain theory, people who have sold these options will try to push price to wherever it's going to make the most amount of options expire worthless. So if you have any open positions on Friday, or if you're day trading, just be very mindful that it's going to be very volatile. And just really taking a quick look at Moomoo's earnings calendar, there's really not a whole lot in the way of important earnings for the week, but I'm going to cycle through this so you can see them if you're interested. The only thing I could maybe see is Smith & Wesson on Thursday after the bell. And then on Friday, we have a Kroger, which could give us kind of an early picture into the early economy of what's going on, and their forward guidance would be most important. I have an important announcement to make. As some of you may already know, I've been working on writing my life story for years, and between my and my wife's health issues, work, and many other things, I simply have not had the time or energy to write. That said, and it pains me to say this, but moving forward, I will be devoting the 6 to 8 hours per week that it takes me to create these videos towards finishing my book, which is a testament to how God can heal anyone from deep emotional wounds, and how he has walked with me throughout my entire life as the father I never had and as my closest friend. If you follow me on StockTwits, X, and here on YouTube, I'm sure I'll continue to post key patterns and levels as I'm able. And if you're subscribed with notifications, I'll be sure to let everyone know when I start making videos again. Many of the key levels I've covered in numerous videos are multi-year levels and would likely continue to hold significance. So please feel free to watch previous videos and copy those levels on your own charts if you'd like. And I've purposely designed my videos in a way to explain how I've charted and analyzed. So I hope you're able to take advantage of that and learn as well. The trading rules to live by are actual rules and reminders from my personal playbook, and I've included one in most of my videos. There's one coming up in just a few seconds. Best of luck, cool cats. God bless. And this isn't goodbye. It's just until later.